and just to emphasize on that, from the risks, perceived risk in the industry, cyber risk is seen as the highest potential risk by its probability and economic impact on organizations. So it has emerged really very quickly. And it's new, and there's no, for pricing, there's not enough information. So all the concepts have one thing in common: risk management first. And only if the risk management is gone through, you would have the possibility of looking at insurance. There is a big mix between costs, property damages, pure financial loss like business interruption, or third-party liability. Yeah, so that is something. That is something which is you have to also keep in mind. When I look at that stuff, there is like a déjà vu. There was an area when I started which was very, very similar, and that was environmental hazard protection in insurance. A big mix between environmental liability, cleanup costs, business interruptions, a virtual world of complications. And if you boil down the patterns, it's similar in cyber risk. So maybe here and there I would refer to that. And it's really fascinating to see also that the same mistakes are made. Very simple. Cyber insurance in general for smaller insurers is more a threat than an opportunity. It's something when you go a little twist wrong, for the broad cyber risk, you could end up in a disaster. On the other side, there is some smaller areas where cyber is a huge possibility. And after our speeches here, maybe we can talk about that element. What I would do now is just give you a couple of hints what to do if you're new with the topic. First of all, it's easier to understand for liability people than for property people. If you look at the wordings, and I took up two here, one is the German draft, and the other one is Hiscox. I took Hiscox because it's the biggest claim case at the moment in court with Hiscox, and it had been voted the best wording of European insurance by broker associations throughout Europe. So that's why I talk about those two. And you look at the basic language. The basic language is liability. The basic language has a liability background. And if you want to get into details, the GDV office in German, a standard wording, which is very interesting to read, well written. And the other part also from GDV is a questionnaire. It's even better because it also says what questions are relevant for what. Again, German, you can use Google Translate if you know how technicalities, how to do that. The Hiscox wording, very well set out, also the explanation remarks, but very British. So even though they offer it also in German, it's more related to the British. And as a start, I would refer to this document. It has been prepared by Insurance Europe with the help of BPAR, Firma, and you could see from the language a lot of impact from Aon Group and Marsh Group into that, and it's perfect. You can obtain it on the site of Insurance Europe. If any of you need help for that, or these documents which I just mentioned, give me a business card, write down CyberDocs, then I would send the links, and that's make you a small service. Okay, when you look at those concepts, all of those concepts, try to take out cyber risk out of other coverages and accumulate those 4 coverages, being pure financial loss cover, liability, third-party liability cover, cost cover or recoveries or risk management costs, and business interruption. To a certain degree, some are in, some are out. They're very expensive. Yeah, so for a small commercial cover, you easily start paying 2,000 or 3,000 euro. And the coverage is very narrow for those commercial things. So it's really question, is it valid for everybody? And then there's small ones, especially combined with risk management and services. For example, if you have a GDPR infringement that helps you establish it, get rid of the data which you should not have, write the right letters, etc. And it's still quite unclear at the end of the day if the fines themselves could be insured or not. Probably at the end of the day, in most countries, not. The big issue today is silent versus express cyber. If you have an all-risk property policy, there may be not an exclusion of cyber. And out of the cases from Petya, you can see there's a lot of twists, and this is very similar. I compare that with the environmental liability when it was about the term sudden and accidental pollution. What does that mean? Because suddenly, sudden and accidental means suddenly it was a claim. Because the legal environment had changed, then it was already sudden and accidental. And here it's very similar that some companies try to recover Petya losses via their normal all-risk policy. The most known case is Merck. Merck has about 3 billion loss from Petya and estimated full economic loss. They have 175 million cyber cover, which doesn't apply for several reasons, which I don't know in detail, but they don't. And then they're trying to recover now from their standard property cover, where they have 1.75 billion. They took the insurance consortium into court. The second one is very much known, is Mondelez, which is a candy maker. And here the same as for Reckitt Benckiser, they have 100 million loss, and Mondelez 200 million. The war exclusion is used by the insurance companies as a reason for non-coverage. War exclusion, why? For Petya, well, simple. Petya is related to Ukraine, and there is evidence that it may have been done by secret services from Russia into their country, and they consider it act of war by the definition in some of the wordings. Let's see where that will end. I think it will be a secret process over time, but it shows that those silent wordings are very, very dangerous. What is totally open and hard to consider, and which is a big hassle for the insurers and the reinsurers, is what is a series or what will be considered one cat event. Take Petya. So if you take a single insured and he has 3 times a problem with Petya, this is a series of loss, and that would be one event. It would be only some insured once and only considered as if it were one event, and all the coverage would go back to the first noticeable damage. But how do you accumulate those Petya cases between DLL Piper, which is a law firm, 200 million, Reckitt Benckiser, Mondelez, Merck, for Petya? Is Petya itself one event? And if it is, it's so huge, not any reinsurer in the world could even take 5%. And that reminds very much of what happened with cleanup costs in the US. So in the US, it was dump sites. They were polluting everything. And then insurers got the money back through standard liability coverages or risk liability coverage, where the exclusion of environmental pollution was not broad enough. Overall, there was a bankruptcy of a little less than 600 insurance companies, half of them in Britain, half of them in the rest of the world, mostly US. And the overall loss for the insurance industry today is considered about $180 billion. And this is also the point, if you insure it as an insurer, how will you define the event? That's the biggest issue.